To the markets now, the Nigerian capital market remains pressured by a number of factors ranging from weakening sentiments, anticipation of policy direction, FX uncertainties, and shaky company fundamentals. Robert Omotunde, investment analyst at Afrinvest, joins us to share his outlook for trading this week. It's great to have you on the show with us.
Thank you, Didi.
We've had a few rather interesting weeks. I mean, 2 weeks ago we were talking about, JP Morgan's phase out of, the Nigerian government bond from its emerging market index. And then last week we were talking about the fact that, US Fed did not raise interest rates as was expected by some, and also the TSA implementation. I just want to get your, in general, when we look at that TSA, because obviously we talked about it all week, and when you imagine the type of liquidity squeeze that we're going to have as a result of that, I would have expected to see rates shooting up significantly, but they did not. How did that fall in line with your expectations?
Okay, for the implementation of TSA, what we saw in the market was on the due date, that was on Tuesday, when that was done. Of course, we saw the impact at the money market space. Of course, we saw that the OBB and the overnight rates were, quite high, showing the effects of that policy on the banks. Of course, we would expect that most of the banks who, were heavy on public sector deposit and who have had to comply with that policy direction, will feel the impact in terms of their liquidity. So some of them, needed to go to the interbank, for the overnight and the, open buyback in order to cover up for, their position. Of course, but what we saw later was also the CBN recrediting the banks, because the effective CRR was 31% or has been 31% before now. Okay, with the implementation of TSA, some of these banks needed to comply, and with that compliance, the CBN also needed to credit them back, with some, about 31%, which was being held by the CBN, Of course, we saw that in the market, but by and large, it was more, the pressure was more felt at the money market end of the market. And
this week is, of course, is all about the MPC meeting and the decision, which will obviously come through tomorrow. And there's a lot of expectation that we will see changes, especially in regards to the CRR. Obviously, given what's happening in regards to the TSA implementation, what are your expectations for CRR? Yeah,
it's quite interesting. Of course, the MPC will be considering a lot of factors, but global and domestic, in order to take a key policy decision. And it's interesting to note that the Fed decided to keep rates at their current level, and that will be much more interesting for the emerging market and, of course, frontier market where Nigeria falls. What we would expect is for the committee to, we believe it will be quite fair on the part of the committee to do, a major tweaking on the CRR. Of course, because the stance of the CBN at the current time, given the directive, which was unanticipated for implementation of TSA, we believe it will be fair on the part of the CBN to actually compensate the banks, by doing something major on the CRR. By our own analysis, we discovered that, okay, based on the data that we have available as of June, about 5.3% of public sector deposits, have been taken over by that particular policy. Okay, give or take, if you want to do a dovetailing analysis of that impact on the banks, we believe that the CBN should be able to, do something like a reduction of about 3 to 4%, in effective CRR. Our conservative estimate is about 27%, but we believe that will, still take the economy or the financial system back to the level that it was before the implementation of, TSA.
And the next thing that really, we were talking about quite a lot last week is the US Fed decision to keep rates unchanged. Tell us how that could impact on trading, especially in the bond market this week.
Yes, for the bonds market is going to be interesting because that decision would mean that funds can still target some emerging markets and, of course, frontier markets, as I said earlier. The decision by the Fed to keep the rate at the current level, is instructive, given, because the fear before now has always been that, okay, when the Fed takes a major decision to raise rates, then most funds will start finding their way back, into the U.S. market. But with this decision, given that global growth is still more or less fragile, okay, we align with their decision to, keep rates at the current level so as to, spur growth, and why they are still watching some of the macroeconomic data. So for the fixed income market, I mean the bonds market, for the week, what we would expect is, of course, you saw that before JP Morgan decided to, before the information about the delisting of some Nigerian bonds, we've seen the market react, and more or less what we are seeing now is a normalization of the market. And of course, with this decision, it's going to be a major catalyst for the market, because we believe that rates will still remain, or yields will still remain at the level at which they are now, while most of the local fund managers and a lot of domestic investors will be finding this market attractive for them to take decision. But the market is still, going to be waiting on the decision of the MPC, and this is what we believe will majorly shape the direction of this market.
And over to the equity side, I mean, the banks are looking pretty attractive right now. I mean, up 5.1% week on week. Tell us what was the major driver for, the gains that we saw, of significant gains there.
I think what investors are saying right now is a proper analysis. Of course, while we have so many other factors that are still pressuring the market, talking about the anticipation of policy direction from the new administration. Of course, the market is expecting that before the end of the month, the list will be released, and then market will start reacting. But in anticipation of that, plus so many other macroeconomic issues that investors are considering, it is expected that these are the factors that investors have been looking at in pricing some of the Nigerian stocks. And for the banking sector, we saw that the performance of the sector relative to other sectors, both for full year 2014 and of course as at half year, has been very quite impressive. And we believe that these are the factors that investors are looking at, in pricing these stocks, which are more or less trading at very, very low, attractive pricing at the moment.
Thank you so much for joining us in studio, Robert. Robert Omotunde is an investment analyst at Afrinvest.